Hello everyone, George DeSantis here with the look at the market for the week ending February 3rd, 2017. As usual, before we begin to look at charts, let's read the disclaimer. It says, trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the market. So consult a licensed professional investment advisor for investment advice. I'm not an investment advisor. Let's begin by looking at the monthly chart of the S&P as we always do. Here is that monthly chart of the S&P 500 we always look at to get the bigger picture. Right now we can see the trend is up. Kalman filter is above the instantaneous trend line. We only had 3 trading days in a month, so we have a very small bar. However, we close close to the high of that bar. So that's encouraging for the bulls. The parabolic is still below the most recent bar and bars really. So there's no indication to reverse this trend at all. MACD continues to trend up from below the zero line, and it's now above the zero line. And you can see that so far this month, the MACD, the histogram is larger than the previous one. And at the bottom of the chart, Elder Force Index has broken this downtrend line and is continuing to remain above, way above the zero line. So this monthly chart, we can't tell very much for the month, of course, because we only had 3 days. However, in the longer term view, it is very bullish. Let's take a look at the weekly chart of the S&P. Here's a weekly chart of the S&P 500 we often look at. We can see that the Kalman filter is above the instantaneous trend line. First thing we usually look at, what's the direction of the trend? If the Kalman filter is above the instantaneous trend line, we are in the midst of an uptrend. The parabolic is still below the most recent bar, last week's bar. And you can see that previous to last week, we had a bullish engulfing bar here, candle really. So the trend is up. And even though we had somewhat of a divergence here, we haven't seen that played out, not yet at least. In my opinion, it wasn't much of a divergence because this histogram wasn't really that much shorter than this one here. So the bulls still had a lot of strength in this position here. And since then, we've had some pretty good looking histogram bars. So in the middle of the chart, we can see percentile remains above 80%. And on these charts, 80% is telling us, above 80% is telling us the momentum on this uptrend is still pretty strong. And RSI 12, which measures the uptrend, which tells us whether we're in an uptrend or so on the weekly chart, is also above 60% and confirming the uptrend. And MACD, as I mentioned before, still looks pretty bullish. So the monthly chart, it remains bullish. The weekly chart of the S&P remains bullish. One little caveat, this begins to look like a hanging man. And for it to be a hanging man, really, the shadow here should be twice the size of this body. And I'm not quite sure it is. But it's possible we could get a little pullback here as a result of this hanging man, which is bearish, somewhat bearish. Everything else looks very bullish though. So let's stop and take a look at the daily chart. Okay, here's a daily chart of the S&P 500. First thing we should note is that the Kalman filter moved further away from the instantaneous trend line and then pulled back the instantaneous trend line, the blue line, finding support there once again. And then since then, on Friday, of course, it gapped up. Now, I wonder whether or not we will see this gap increase, or if we will hold that gap rather. On the other hand, we have an ABCD triangle, which is bullish at the end of an uptrend here. And I've calculated the target of 23.21. You can see the numbers here. A is 22.99, which is this high, minus this low at B, added to the high of C, and you get 23.21 as a target. Now, Jerry Appel, some of the rate rate of change indicator is below the 4% line. I use it on the S&P just to see how it looks, but frankly, Jerry Appel designed this especially for the NASDAQ, and that's where I use it, on the daily chart of the NASDAQ. Now, MACD is slightly below zero, but trending up, appears to be, at the verge of crossing above zero. And percentile crossed above 80% again, showing that the momentum is pretty strong here. So the monthly chart is looking pretty bullish. The weekly chart of the S&P also looking pretty bullish. And let's take a look now at the NASDAQ, the weekly chart. Here's a weekly chart of the NASDAQ composite. Now we can see here that I did plot these lines showing us the divergence of MACD on the weekly chart of the NASDAQ. And usually that plays out as a pretty ominous sign, and we get a decline in the price of the market. But right here we haven't seen that, not as yet anyway. The Kalman filter remains above the instantaneous trend line, so the trend is still up, and we've had a nice bullish engulfing candle here at the right end of the chart. This last bar here last week, again, as we saw earlier, we have a something looking like a hanging man here. This body of the candle, this shadow rather, should be more than twice the size of this body, the length, the height, and it isn't really. It's close, but maybe no cigar. We'll see how that plays out. In any case, we have an uptrend. The target was hit here, this 56.54 target. We close at 56.66, so this target was already hit, and we'll see where we go from here. Now, the RSI 12 is still above 60%, so that confirms the strength of the uptrend and so on. MACD is trending up once more, so we wait to see if this divergence is ever going to play out. Let's take a look then at a daily chart of NASDAQ. And here's a daily chart of the NASDAQ composite, and well, Kalman filter is above the instantaneous trend line, so trend is up. I just drew a triangle, ABCD triangle here, and at the top of this uptrend, when you get a somewhat symmetrical triangle, it's usually a continuation pattern. And we can see that we've already breached this upper line of the triangle. So this is looking pretty bullish. What I did was calculated the target from this triangle, and you can see the numbers here as we saw on the S&P. So A minus B plus C gives us a target of 57.47. Now in the middle of the chart, Jerry Appel's rate of change indicator remains bullish. It just bounced off of the 4% line on Friday, and it's up there again. So that's bullish, and that's where we want to play the QQQs. Elder Force just broke above this downtrend line here, so that looks pretty strong. So let's summarize. In terms of the NASDAQ and the S&P, all three time frames are showing us bullish indications. The trend is up. We're making new highs in some instances. So there's nothing not to like here, really. Let's take a look at a few other things in the stock charts. And here's this stockcharts.com chart of the S&P 500. It's a weekly chart. We always want to know what is the impulse indicator indicating. So the impulse indicator is the colored bars, right? I don't need to go over that again. I've done it many times. The most recent bar, last week's bar, is blue. Now, it still allows us to either own or buy the S&P. So we have permission to buy or hold the S&P, the index, or if we were looking at an individual stock, same thing would apply. If it's a blue bar, we're allowed to buy or hold. Let's take a look at the daily chart. Updated to the daily, and we can see that on the daily chart we have a green candle, and that is even more bullish. Tells us we are allowed to buy. All right, now I'm going to call it a day because there's nothing much more to add. The market looks very bullish, and I own a number of stocks, and I'll mention some of them in the email that I send you with the attachment of the video, the link to the video. Have a nice weekend. Uh, I'm rooting for Atlanta. Um, don't like New England Patriots, and I hope you enjoy the game and have a good weekend. Bye bye.